What is going on, everybody, and welcome to another weekly update. In these videos, what I like to do is provide you some guidance for the upcoming week. If there's events, if there's earnings, provide you guys some technical analysis to get you prepared for the week ahead. So if that sounds like something you're interested in, consider subscribing, as I do provide daily updates as well, because this market, it changes, it shifts each and every day with each piece of news. So typically how I like to start these out is give a little bit of market sentiment, kind of like to pull up some notes over the upcoming week and what I got going on, what I'm really looking at. And considering, if you can see the chart, this week, you really have to keep it simple. There's still the big tech earnings are over. There's still going to be a lot of floaters out there. There's a lot of good earnings. I got two particularly here that I'm watching. Not to say that I'm going to really play those. I do like Shop. If Shop does beat and do really well, that is definitely one I want to watch. AMD is more to kind of gauge chips. Chips of forward guidance has been extremely bad because of supply chain and a lot of guiding down. Big tech has done a lot of guiding down over the past week. That's what we're learning. Something I've been talking about is that we needed to see the earnings to see what was going to happen with lockdowns and sanctions. So far, some have beat, some have done really well. Apple did really well, but they didn't have no forward guidance, and it tanked Apple. Because again, they're unforeseen. Why put guidance out there if you're uncertain with the conditions of the market, what's going to happen, i.e., chip constraints and sanctions, lockdowns. There's a lot of different things that come into play. So being said, we are starting to see that it's starting to unfold. We have to also remember that Friday was end of month, and typically you do get some heavy selling on that last day of the month. Just something normal that does happen. So just be mindful of that coming into this week. This week is going to be a big week. We got the FOMC meeting. It's going to have a big impact on the market on how hawkish the Fed actually is. So far, Powell's essentially suggested that there's going to be at least a 50-point basis hike. A lot of the Fed futures are saying gauging around 75-point basis for the remainder of the year. That seems to be going higher. So we'll get clarification on that. My biggest thing with the Fed meeting is, again, if asset purchasing ends. That ends, I think it's going to impact the market a lot more. But we are at a critical level. I don't see us selling off any more than we already are. I think we're going to see this nasty chop until the market straightens everything out, until we get essentially clear guidance, which I think towards the back half of the year is essentially what I've been talking about. That we're going to start getting some bigger moves once we start reporting next earnings for this quarter. I think we'll start getting better moves, especially stuff because so much stuff is starting to get downgraded now. I think a lot of these big corporations are going to do extremely well on the next one, and then they're going to kind of blow everything up and kind of push us back to all-time highs if we aren't there already. So being said, this week is a big week with the Fed. That is on Wednesday. You got the report that comes out at 2 o'clock. So you're going to get an initial move at 2 o'clock. And then the real volatility comes in when Powell comes on at 2:30 to field questions. And again, this is at Eastern Standard Time. So once he starts coming out, the market is going to be flipping back and forth quite crazy. You have to always remember every initial move when Powell is talking is typically a fake out, and the market will typically run the other way. And so with all the big event that's going on this week, my watch list is extremely small. Playing SPX, playing Tesla. I want to keep it very strict between these two during this week because of what's going on. There's some other value stocks like Cost. Target is another one of them that are coming into some really good supports. Everything is at really good supports. I actually believe coming into Monday, we're going to possibly get a good bounce. Possibly even run into Tuesday, and then bring us back into the top range, and then we get the Fed and Powell, and I think that could potentially bring us back down to the current range that we're currently sitting at. And this is what I'm talking about. We played this range pretty much all week coming in. Again, we had Powell. This is Powell digestion for 2 days, and then we had earnings. It had some bad forward guidance, kind of just sunk us down. Friday, I'm thinking it's more end of month. It could be breaking us down below. If we actually open below this 41.49 mark, it could get bad, and we could start really selling. Again, you have the 4K psychological level. Then you have some other supports here. Then you got the 200 EMA weekly. It's not very typical. We do see that. Again, I think this market is just going to chop like this. You're going to get some nice pumps and then some dumps. Nice pumps and dumps. I think it's just the way this market's going to be because of everything going on. I don't think there's strong enough bad news to just sell us, to just continuously sell us. You're not going to see a limit down like you saw back when the pandemic started. Again, that was a complete black swan. Those events don't typically happen. I can see possibly maybe like a lot of people are talking about possible flash crash. Could happen. Just means it's going to sink really quick and then wick fast and then start pushing up. Could be a strong possibility. Again, everything is lined up, as you can see on the support of the 41.61 going into Powell. So I'm actually kind of really expecting this to pop over here, the 41.70 come Monday morning, or even open up Sunday night at this point, and then we start popping back to this top range of the 42.95 essentially. So I think we can be here possibly by Tuesday. Then if we get any kind of bad Powell news, sell back off. If it's really bad or they cut bonds and they triple rate hike or something like that, we could potentially break straight through this and start heading down a little bit lower. Although anything past this, I think is strictly going to start being, once you start getting closer to that 200 range, is a huge reversal in that the candle typically will not touch this. It will come close, especially when you start getting the higher time frames like this 200. Like this could hit the 38 and this completely wick back up, and just start riding back up. So that's something to keep in mind when you start playing with that 200 on higher time frames. Is huge reversal points. So just keep that in mind going forward. And now that we're starting to kind of see how everything's playing out, is giving answers. Coming in this year, there was a lot of answers people had, and we're starting to get those answered. So it's just being patient with the market and surviving, because that's ultimately what you're trying to do in this current market. Now let's talk about crypto real quick, as we always do. Crypto, again, not concerned about this unless it breaks this 32. Breaks below this, but ultimately my real guiding light here is around that 29K mark. Breaks below that on the daily, I think then it would be more of a concern for me. It actually looks like a wedge break here. Again, leading everything up into Powell and everything. Everything's at good support on the index. I think we could pop right here and start heading back up again. And then we kind of got this range we're playing, so we could potentially break above 52 if we do start pushing up again at this point. Again, the resistance here it's been buttering straight through this stuff. So we've been playing this nasty, sloppy range. It's just the way the market is. It's nasty and sloppy. It doesn't make any sense. It's pretty much a penny stock at this point. So gonna have to see how we do from there and continue forward. But we'll look at Tesla real quick, since Tesla is a big one. Now, this is a wedge break and retest. It's retested a couple different times, but it doesn't want to sell past the 82. We did have Elon selling shares. This is what you have to remember. Elon sold a ton of shares on Monday, sold a ton of shares on Tuesday, and now the market's back up. He said he was done selling. Coming into Monday, Tesla had a fantastic earnings, and it couldn't break, right? Because this is as soon as Powell on the same day, Elon selling. Now that everything is good, it hadn't had its post-earnings run. And I think we could see that coming into this week. Monday, Tuesday, possibly start running pretty hard. I think we can at least pop back to possibly that 1K mark, bring us right back up here. Is a very strong possibility. And then I think that kind of leads us to, well, okay, what is the Fed doing? Is the market, what's the market sentiment at that point? Would be perfect if we landed back here at the 1K mark, and then ultimately see if we can continue back up from that point. So essentially, I think we can get like a continuation here. This is essentially all just Powell and Elon selling. And then from that point, it's just, if you remove this, it would be just more like a consolidation and pump out of here is kind of what I'm thinking with Tesla. And again, Tesla, you kind of have to go with your safe haven this week. And so that's why I have just Tesla and SPY. SPY kind of helps capture the market as a whole, especially with value. The rotation between value and tech has been really fast. If you want to play those, I particularly like just to play the index. Because you can find better moves, especially in these pumps and playing mostly options. These pumps pump huge amounts, especially with this consolidation. Well, talking about Tesla in general here, but when you're talking about the index and looking at value stocks and stuff like that. So, and again, I said Tesla has a 76-point move coming into this week. So if you look at it, it's almost a 100-point move. So you're almost right back at the 1K mark. I think we could find ourselves there. And if the Fed continues to buy bonds, everything is kind of hitting expectation as far as what the Fed is kind of gauging here, like a 50-point basis move and continue to buy bonds. I think we can break out of this and start going for a bit of a run after that. The run itself, I think, will be kind of short-lived because you're kind of coming out of the back end of big tech. Once you start coming out of the back end of big tech earnings, you got that 3 to 4 week sell-off, and then from that point it starts running. Tesla's had we've had a week so far, so we probably got 2 or 3 weeks pop potentially with Tesla, although it hasn't had its pre-earnings. And one thing to keep in mind that Tesla, I think, being a safe haven and everything else, could potentially start running back up. So some of those. As far as some of the other ones, again, I don't really care about Apple, Google. Again, I want to keep it very tight this week, but cost could be a potential play this week because you are coming into the 200 EMA. So looking around, you got a couple of EMAs here floating around the 550, 520 mark here is a pretty strong support. Then the 200 floating around the 506. Essentially, that 500 EMA. Could get a really strong reversal there, back up. Cost could be one of them. Target's another one. Target, again, another one coming into really great support. You can see the support level here it's coming into. So as long as it doesn't break that 225, I think Target can start heading back up. Again, I think we're going to see, as long as the Fed doesn't get too crazy, I think we're going to see a good, strong rotation of value in tech. That's why I like playing the index in general. Because it makes massive, like 30, 50-point moves on the index. And that just simply states the massive amount of volatility in the market right now. And so those are better to capture on the index, in my mind, for a lot of these particular ones. Makes it a little bit easier when you got strength against the general market pushing up or pushing down. And the whole market, I think it's about 60% of the market, all the stocks are moving the same way anyway. It's easier just to capture that mostly on the index. But also I like to keep Tesla on there because Tesla always makes big moves and is fantastic for that as well. Again, making the 30 or 20, 30, 40-point moves in a day is not unheard of from Tesla. So, but short and sweet this week. Be interesting to see. So just, again, be mindful of everything, manage risk, or not even play this week with what's going on this week because of the Fed. Wednesday is going to be huge. Digestion overnight is going to be huge. Just be mindful of that and be very careful of that. Again, after Powell speaks, you kind of want to give an hour. So you're kind of looking at that 3:30 Eastern Standard Time. You got 30 minutes before market close on Wednesday. You could kind of get a sense of where the market's going to go from that point. Could potentially even go 3 o'clock. Could potentially be a good gauge for that too. But you definitely want to give some digestion to see where the market, how the market takes it. So if you made it this far, go ahead and drop a like button. And until next time, I'll see you guys later.